Welcome back to Wealthblueprint716. I'm your host Alfredo Shell, and the year 2025 ushered in a new era for global trade, marked by the implementation of significant tariffs by the United States. These tariffs, essentially taxes on imported goods, were designed to protect American industries and address trade imbalances. The baseline tariff, set at 10%, applies to all imports entering the U.S. market. However, the situation becomes more complex with the addition of country-specific tariffs. These tariffs target specific nations, adding an additional layer of cost to goods originating from those countries. For instance, goods imported from China now face a hefty 34% tariff, while those from the European Union are subject to a 20% tariff. These tariffs have sent ripples throughout the global economy, impacting businesses both large and small. The stock market reacted swiftly with a sharp decline, reflecting investor uncertainty about the future. Consumers are also feeling the pinch, as the cost of imported goods, from everyday groceries to electronics, has begun to rise. While the stated aim of these tariffs is to bolster American manufacturing and create jobs, the long-term consequences remain uncertain. The interconnected nature of the global economy means that these tariffs will likely have far-reaching implications, impacting supply chains, consumer behavior, and international relations. Navigating this new trade landscape will require adaptability and innovation, especially for new businesses entering the market. Launching a business is always a daunting endeavor, requiring careful planning, resource management, and a healthy dose of risk-taking. However, the implementation of the 2025 tariffs has introduced a new set of challenges for aspiring entrepreneurs. These challenges can make an already difficult process even more complex and uncertain. One of the most immediate challenges is the rising cost of goods. For businesses that rely on imported materials or products, the tariffs translate into higher operating expenses. This can significantly impact profit margins, making it more difficult to price products competitively and achieve profitability. Small businesses, with their typically tighter margins, are particularly vulnerable to these increased costs. Beyond the immediate impact on costs, the tariffs have also introduced significant uncertainty into supply chains. Businesses that source materials or products internationally now face potential delays, shortages, and price fluctuations. This unpredictability can disrupt production schedules, impact customer satisfaction, and make it challenging to plan for the future. Furthermore, the tariffs have contributed to a general climate of economic anxiety. The stock market volatility and fears of a trade war can make investors hesitant to support new ventures. Consumers facing higher prices and economic uncertainty may also be more cautious with their spending, potentially impacting demand for new products and services. In this environment, new businesses need to be especially strategic and resourceful to overcome these obstacles and achieve success. Despite the challenges posed by the 2025 tariffs, new entrepreneurs are not without options. By adopting strategic approaches and demonstrating adaptability, businesses can navigate these turbulent waters and position themselves for success. One key strategy is to explore alternative sourcing options. While this may involve some initial research and adjustment, shifting to domestic suppliers or those in countries less affected by the tariffs can help mitigate the impact of increased costs. This approach can also have the added benefit of supporting local economies and shortening supply chains, potentially leading to greater stability and reduced transportation costs. Another important strategy is to focus on cost-cutting measures within the business. This could involve streamlining operations, negotiating better deals with suppliers, or finding ways to reduce waste and increase efficiency. By carefully managing expenses, businesses can offset some of the impact of the tariffs and maintain healthier profit margins. In addition to these operational adjustments, new businesses can also leverage the current climate to their advantage by focusing on products or services that cater to changing consumer demands. For example, the emphasis on domestic production presents an opportunity for businesses that can offer locally sourced or manufactured goods. Similarly, businesses that can provide cost-effective alternatives to imported products may find a receptive market among price-conscious consumers. The 2025 tariffs represent a significant shift in the global trade landscape, presenting both challenges and opportunities for new businesses. While the immediate impact has been felt through increased costs and economic uncertainty, the long-term consequences are still unfolding. In this environment, Adaptability and resilience are essential for entrepreneurial success. New businesses that can adjust their strategies, explore new markets, and embrace innovation will be best positioned to weather the storm. By focusing on efficient operations, building strong relationships with suppliers, and understanding the evolving needs of consumers, entrepreneurs can turn these challenges into opportunities for growth and success. The current trade environment serves as a reminder that the business world is constantly evolving. Those who can anticipate change, adapt to new realities, and leverage their creativity will ultimately be the ones who thrive. The 2025 tariffs are not insurmountable obstacles, but rather a call for ingenuity and resourcefulness, pushing entrepreneurs to find new and innovative ways to build successful businesses in an ever-changing world.